We'll just give it a minute for everybody to join on board. We're starting at 2 o'clock. I can see there's more people joining now. So thanks for joining us, guys. Awesome. Good to meet everybody. It is 2 o'clock, so we'll start making. We'll jump into it, shall we say? And any questions you can feel free to ask at any time. So we're talking about passive income and the different strategies that we can use, which is always a really interesting approach because, I suppose there's an element of what is true passive income. How do you explain it? And to a degree, it's very difficult to have a complete passive, especially when you're talking about property. However, there are some strategies that you can use that, heavily reduce the amount of involvement you have in growing that wealth. You'll all have buttons in front of yourself on Zoom where you can, I'm sure everybody's used to Zoom now, actually. We've been using it for a couple of years, but everybody's kind of using it now. But yeah, there's a couple of buttons there. So if you've got any questions during the presentation, feel free to shout out. You can also raise hands, and don't feel any problems with jumping in at any point. Happy to expand on anything we can talk about. So let's jump into it and find out a bit more about the passive income from Sourced franchise. So first of all, an introduction to myself. So my name's Stephen Moss. I'm the Managing Director of Sourced Group and Sourced Franchise. I'm an experienced property investor and developer. So I've been in the property sector for about 20 years now, and I'm currently developing 1,500 units across the UK. So quite a large amount, quite a large number, and anybody that knows our group and our business will be aware of the different flagship developments we have across the UK. So really exciting stuff. My previous business, legal for landlords. So I dealt with evicting tenants, tenant referencing and insurances, all the juicy stuff. And yeah, we did very well. We grew the business to be the largest tenant eviction company in the UK. During that time, we also created and launched a Sunday Times top 10 phone app. So that's our claim to fame in the tech world, if you like. But yeah, it was really exciting. And then to set up and launch Sourced, obviously we've managed to keep that momentum going and create this fantastic business. A story so far in terms of Sourced. So we launched in 2017, our pilot scheme. Our franchise model was launched in September 17. We became FCA regulated in August 18. In October 18, so a year after our franchise model was launched, we had 40 franchisees. We launched our largest developments to date in February 2019 for £150 million. We became ISA and pension approved in March 19. And what that meant is that we actually had access to much larger pots to fund our franchisees' opportunities and developments. We introduced a care sector and a care team to our business in September 19. And then November 19, we hit 60 franchisees. So really good growth, manageable growth in which, we've scaled up the infrastructure and tech to support that. January this year, we will, at our Source Capital side, we're raising £1 million a month, and we're above that now, which is fantastic. And then July this year, we hit 100 franchisees, so real milestone in the business. Great network of people, lots of really good experience, and that's kind of become the foundation for our partner business that we launched earlier this year. Our business Sourced, so the Source Group as such, is split into 5 sections. We've got the property, we've got capital, developments, care, and franchise. So the property side of the business is all about helping investors build their portfolios. And if you're registered on our mailing list for the property side, you'll see that we introduce off-market opportunities, roughly about 30 deals per week. So quite a high volume there. Our capital side is our peer-to-peer lending. So we're an FCA regulated peer-to-peer lender, which is fantastic because we only fund our franchisees' opportunities. Developments. So I mentioned earlier 1,500 units. So in total, we're currently building at £270 million worth of developments. Our care sector. So we built this and put this together really to help properties and move properties into the care industry. So good opportunities, good conversions or refurbs or new builds that we knew would do well in the care industry, in the care sector, and giving our investors longer returns and good healthy returns. And then we've got our franchise model. So our franchise model is our network. That's where we started the business. And we separated this into two this year, into our network and our partner side of the business. And we're going to touch on them throughout this presentation. So the webinar today is all about creating a passive income from property. And there are lots and lots of ways that you can do this. We're going to focus on a couple of those and drill down a little bit more in detail. And it's probably not going to be the strategies that you initially think of. We've thrown a curveball in there because it's property related, and we think that, you know what, I think it should be considered when you look at all the different strategies. So the first thing is for anybody that's new to property. I noticed from the people who are watching, there's a few names that we know there already, so fantastic and good to have you guys on board. Well, firstly, why property? And looking at the current market and where the market is now. So this is a snapshot of a graph of UK construction activity that we took from the Financial Times, very recently published. And this kind of gives us an overview of actually what's been happening this year. You know, we all know the word, you know, COVID and COVID-19 has kind of dominated, which is understandable. You know, but how has that reflected, and how has the market reacted to it when lockdown was lifted? And I'm sure a lot of people that are in the property sector watching this, or certainly studying the property sector, will be aware that we've got this bounce and this recovery at this stage. And properties in particular we put on the market are selling very, very quickly, which is great. We're seeing a really, really good uptake of properties. We had a site very recently, about 2 weeks ago, we put on the market for 7 detached properties, houses, and they all sold within 48 hours. So really good, £10,000 per plot over the asking price. It was achieved and from what was forecast as well. So it's good. It gives us a little bit of comfort that there's a market there. How long that will last, you know, I think it's a question we get asked quite a lot. I think the reality of it is that the government realised that the housing market is such a big influence to the whole economy that it's important to keep it going. It's also worth highlighting as well that we've got the new planning laws coming into place, and the white papers are being written and drawn up. You know, once we see those, I think it's going to open up the market a lot more for people to be able to convert properties, build properties, and generally, you know, utilise a lot of space that isn't utilised, particularly in the retail sector at the moment. So why do people love property as an investment? It's a good question. So it's bricks and mortar. It's quite a common term that you hear. So it's, you know, it's tangible. The stability. So the housing market, although there may be dips, as we've just seen in the construction industry, and quite often the property market follows the construction industry with a slight lag. You know, we always know that there's a return and there's a bounce back, if you like. Growth in the portfolio. So people are comfortable that over a period of time, their value will grow. The same with the capital growth as well, not just the income from the portfolio. It generates a return, which is always healthy. So it's nice to know the opportunity. And as I mentioned earlier, it's tangible. People can actually physically see it. And I think a lot of people get a lot of benefits from that. If they're driving past particularly new build apartments and they see the steel going up and they see that, you know, things are moving on the site, and it gives them comfort that actually, yeah, things are happening. That's my investment. That's what my money's going into. And there's a lot more comfort with that. Types of returns for properties. So capital growth is probably the one. I suppose it's usually the bonus. Not many people, unless you're doing a sort of flip where you're looking at a short-term growth, but typically capital growth is spoken about over a longer period of time. So 7, 14 years, 21 years typically. Most people initially look for a yield, a return there. So if their cash is going to be tied up, what return is that going to get from the property? So from a rental point of view, how much income are they going to generate on the back of that? And also the uplift. So again, the refurb, if you were to refurb a property, you've got an immediate uplift. You've then got a rental income coming in, And then you've got capital growth, which sits in the background, and over that longer term period increases the value of the asset you've purchased. So 3 of the key reasons why people invest into property, which is understandable. And this is a really good one, the property investment cycle. So this is the one that causes most of the arguments in the office and the debate as to where actually are we? Where are we in the property cycle? And if you look through history, in terms of the figures of property prices and what's happened, you can follow this cycle really, really well. You'll see on the bottom right-hand side, you've got the slump. I think it's fair to say that we've moved past that. Confidence has started to come in. Finance has become more available, although potentially at lower loans of value. Reduced property availability is certainly there at the moment, and property prices have started to creep up as well. So, potentially a boom, potentially at the beginning of the boom already, or partway through. I think that's the argument for different people at different stages, but certainly seen, on the left-hand side, if you were to look at it as a clock for 9 o'clock, in and around those sort of areas, and then we'll see it go through the cycle again. So quite an interesting one. If anybody's looking for a copy of this or part of the investment cycle, you can actually visit our website. And if you go to resources, you can download a lot of these infographics and details on our website for free. Okay, so what is passive income? And how do you value it? So passive income is, an income that you aren't having to work on or generate or spend a lot of time on. And people, I said this at the very beginning, people value this in different ways. People see passive income as spending half a day a month. People see it as not touching at all. And I think it's difficult to have a true passive income, as in you don't set it up, you don't touch it, that there are very, very little avenues of property income that are passive. So we're going to talk about it generally, and also what for you makes it passive. A lot of people look at it in terms of their time. So how much time do I have to put into this? And everybody's in a different situation. Is your focus more on your hobbies, your family, your career, your friends, your health, your travel, your own current business, or helping others as well? And creating a passive income so that you can have something that's generating an income in the background with you putting very little time into it. So a really good example of this is one of the reasons we created our partner arm of our franchise business, is because people were coming to us to say, I'm a doctor as an example, or I'm I have a profession. I love my profession. I've worked really hard to get it. I've got a great income coming in. However, I love property. I'd like to have some involvement in it. How can that work? How can you help me develop that? And that's really where this opportunity was built. It's also worth looking at as well at the income that you can generate from a passive income, and what your expectations are from it. So, look at what you're looking to achieve. Is it £5,000 a month? Is it £10,000 a year? How much as well do you need to put in to achieve that? Are you looking to replace your current income as well? So a lot of people that we speak to start off on the basis that we'd like to create this passive income, and then ultimately this passive income will replace our salary, or will be our pension pot, or will be, that driver to help you achieve your goal. And that goal could be a number of things. It could be your desired lifestyle, it could be a financial goal, or it could just be there to help your ambitions, no matter what they are. So it's a real key thing, passive income. It could be a real driver, and it's a really important thing. And property is a great way to utilize it as well. So I mentioned earlier, is there such a thing? Having the knowledge, putting in place longer term goals is important. Being hands-on to a degree and having some time. I don't think it's possible to buy a property and be completely passive income, because even if you've got the setup of it as well. It's also worth looking at the short-term goals, the long-term goals. When we set up any franchisee, we talk to them about, what's it going to look like? What's this plan going to be? What are you looking to achieve? How long have we got to achieve it? What capital have you got to put into that? What knowledge have you got to put into it? What time have you got to put into that as well? Some of our investors are obviously overseas, so they look at this as a complete hands-off portfolio build that they put very, very little time into, and utilize it in that way. And let's look at the strategies as well. So, when we talk about property strategies, there are lots. You've got rent to rents, you've got Buy-to-lets, so your normal buy-to-let where you buy a house and simply rent it out. You've got HMO strategy. You've also got strategies which include commercial. You've got strategies peer-to-peer. You've got lots and lots of different strategies, and there are lots of ways that you can structure them. So you can do refurbishments, you can do new build, you could do, the strategy is typically made up of two things. What's the ultimate goal? Is it to take a commercial property and convert it into residential? It's a conversion. Is it to take a property and refurb it? Or is it to do a complete new build? Or is it to, take a commercial and have a long-term lease? We've noticed from the sector and the market ourselves that commercial used to always kind of be the go-to strategy for longer-term investors. So an investor would look at a property and think, right, okay, I'm going to invest my money into this commercial. It's on a 10-year lease, 12, 20-year lease, and that will give me income for that length of time. A good yield, 7, 8%, 10%. I'm working that way. With the changes in the market now, particularly with commercial, people are less and less attracted to that and looking at other ways that they can generate that passive income by investing into things. So we looked at ourselves, we looked at all the different types of strategies and talked as a group to say, okay, what would you say are the passive income strategies? And we came up with 3. So I'm going to click on this to go through. So the main strategies for passive income are peer-to-peer investing. So that's a little bit of a curveball because, is it a property investment strategy? You are investing into property. It's utilizing it in a different way. It's getting a return from property. So I think it's quite a good one to put in there. It's also as well having, one of the key things to any investment is having a diverse type of portfolio. And this is something that will offer that. You'll have, by investing and buying property and the likes of peer-to-peer, I think there are advantages there. Buy-to-let is quite a popular one. A lot of people we speak to, I'd say actually probably nearly 100% of people we speak to, when we talk about their actual goals and investment, particularly for passive income, they look at, okay, I'm looking to get to, 5, 10, 20 family homes as a buy-to-let, because for them, it's very steady, it's straightforward. Yet when we start actually delving into, well, what are the income goals? To achieve the income goals using this strategy is a lot harder because generally the income's a little bit less. And we'll touch on that shortly. And then the final one, HMO, so house of multiple occupation. So anybody that's new to this sector or new to property, HMO is when you have multiple people renting multiple rooms in a particular property. So it's been a popular strategy for the past 10, 15 years. There have been changes in the market, but a lot of people do use this as a passive income because the income can be quite high from it. And with the right setup, structure, and purchase, there's a lot less management involved in actually running and operating it. So let's look at them individually. So peer-to-peer, let's look at the pros. So tax benefits available, hand-picked investment opportunities. So anybody as well, let me start off with what is peer-to-peer, sorry, jumping straight in as usual. So peer-to-peer. So we have a peer-to-peer investment platform, which means that our franchisees, they go and find an investment opportunity. They bring it to HQ. HQ carry out their due diligence. It gets signed off by our team, and then it's put on our peer-to-peer platform. Investors like yourselves can then invest into that project either with cash, ISA, or pension, and that is classed as a loan. So that loan is typically a fixed term for a fixed rate. So with our peer-to-peer platform, it's 12% typically over 12 months. So it's a good return. Hand-picked investments, which we touched on there. High returns, so with peer-to-peer and source capital, 12%. It offers a diverse range, so you can invest in different projects across the UK, different types. You know exactly where your money's being used to, so you're not just investing into a fund or a pension fund as such. You're actually putting it directly into a project. The negatives, so your capital is at risk. There's no guarantee. There is security in place, but obviously, like any investment, there are risks. Your interest isn't always tax-free. So if you invest with cash, then you'll pay the tax depending on your tax situation. You can invest with pension or ISA. And no capital growth. That's probably the biggest one, depending on what your strategy is. because you're not investing, you're investing your, let's say, £10,000, you're going to get a 12% return, but you're not going to see a growth on that £10,000 as well. Time constraints, so you are limited to, the projects do fill up quickly. You've got to act fairly quickly and do your research quickly as well on that particular type. Buy-to-let. So let's look at buy-to-let. So we know buy-to-let as you can buy a normal house and you rent it out, typically to a normal family or couple or individual, and they pay you a rental income for renting the whole property as such. The pros of that are capital gain. So as you own the property, there will be growth. Over a period of time. You generate an income while you own it as well. So you've got a rental income coming in, which is fantastic. Demand. So buy-to-lets are seen as being good, safer, should we say. I think that word's it's used quite a lot when you talk about standard buy-to-lets, but there's a demand for it and seen as secure. So people know that, okay, if I've got a 3-bed semi-detached house, there's always going to be a family that will want to rent this particular house because it's near a school or it's near X, Y, Z. So they're the pros that you typically see. The negatives, purchasing, there's an increase currently on stamp duty. Actually, there's a hold on stamp duty, but as an investor, you've got the additional stamp duty to pay. Rental voids potentially. So if it is empty, you've got voids there that you've got to pay. Non-payment of rent. So like any rental, you've got challenges of tenants. Drop in market value. So, how strong is the market currently and how much growth is there in your standard sort of buy-to-let property? Legislation potentially. So the government constantly talking about more legislation, and obviously with COVID-19 at the moment, there's been holds on evictions and tenants not paying the rents. This isn't a scare tactic at all. This is just obviously what's happening in the market. I think the other key things for me with buy-to-let are it's nice sometimes to have a mixture of buy-to-let, but ultimately it's what your goal is with your portfolio and your income levels, because probably the biggest negative with buy-to-let is the actual growth. So when you buy a buy-to-let, unless you're buying that and it's already heavily discounted or needs a lot of work, and let's be honest, we're in this sector as a business, we analyze over 500 deals a month, yet we struggle to find those individual properties that need renovation or are much cheaper than what they should be, because there's so many people looking for them. So that's a very, very difficult side of the market. So to buy a property that, a typical buy-to-let doesn't have a big increase in value or uplift straight away. So you are generally relying on the capital growth throughout the period of ownership. We've then got the final one that we picked as a passive income, which is HMO. So HMO, we mentioned before, multiple occupancy. So, multiple people renting a property from you, all on the ASTs. So the positives, typically 3 times higher yield than a single let. So good income, which is good. Increased revenue with fewer properties. So again, this comes down to your goals. So I mentioned before, a lot of people we speak to and we meet initially have a view of, I'd like 10 3-bed semis in my portfolio, rented out to families and giving me an income of X, Y, Z. And actually, when you work back that income, it's very difficult to achieve just on buy-to-let properties. Whereas if you're generating 3 times that income, you don't need as many properties to do it with through the HMO method. Spreading the risk of multiple tenants. So again, a lot of people will look at HMO and go, right, okay, that's a HMO with 6 rooms. That's 6 tenants that I've got to fill, etc., etc. Well, ultimately, it's not, because usually with a HMO, if half the HMO is empty, you're still getting the same return you would on a typical buy-to-let property. Steady on the market. So I think this is really more about the demand. So the tenant costs being lower than living on their own. So a lot of people we speak to sometimes can be a little bit standoffish, I suppose, about HMOs. I think we'll touch on that actually through the cons. So licensing and planning. You only need licensing if you're going to a certain size as planning as well. It's good to have that set up, but it shouldn't put you off being a HMO owner, because ultimately it's just a guide. You follow these guidelines and make sure they're put in place and you'll be fine. Mortgages, so really important one to highlight. There are less mortgage lenders in the sector for HMOs than there are for typical buy-to-lets. So that's quite a good one. Tenant turnover. So potentially with 6 tenants in one property, you're going to get more tenants moving in and out of the property. So you need to be aware that could be more work for the agent, or make sure the agent is experienced with it. And finding good tenants. If you've got one property, a buy-to-let, you'll need to find one good tenant. If you've got 6 rooms, you need to find 6. So again, it comes down to the experience of the managing agent and making sure that they've got that experience in place. A lot of people we speak to about HMOs, and the initial kind of approach with them is, they've been around for a long time and they've seen rooms empty or, in poor conditions. And I think the HMO market is really fair to say that it's gone through a transaction over the last sort of 3 to 4 years where, your typical HMO where it was rooms that shared the bathroom, shared the kitchen, they're less and less in demand. If you could put HMO together and have en suites and kitchenettes, maybe with some shared facility as well, they are still very popular, still very sought after. And typically that comes down to the comment about, being lower price. When you look at wanting to live in an area, a lot of our HMO tenants will travel there, live there Monday to Friday, and then return back home at the weekend. Quite often you generally find that what they're looking for is, they're looking for somewhere clean, they're looking for their own facilities, looking for somewhere tidy and safe. And if you're building your HMO to that standard, then that's the sort of people that you're going to attract. And generally that's what we find throughout our portfolio and people we deal with. So what is the ultimate passive income strategy when you look at the 3? So I thought it'd be good to kind of put these on a bit of a comparable table. And, it's not the easiest thing to do because it's not all straightforward. So we've got peer-to-peer, buy-to-let and HMO. So for an investment level, I've put there peer-to-peer. I mean, peer-to-peer, you can invest for £250, but the average investment is £25,000, £30,000. So I thought, look, let's put £25,000. It makes sense. Buy-to-let investment is 15%, typically to get a buy-to-let mortgage, and HMO is typically 25%. So a little bit more expensive for the HMO side, but sometimes or quite often that can be cancelled out by the uplift in value. So returns, so peer-to-peer 12%, buy-to-let, we've got an average at the moment, a lot of areas at 5.5%, and that's a gross, and we've got a HMO of 15%, so quite an attractive return. Growth, 0 growth there on capital growth for peer-to-peer, and we've just put 4% for buy-to-let, 4% for HMO, based on previous trends across markets. Uplift, so for peer-to-peer there is no uplift. You simply invest in £25,000 for a 12% return. For buy-to-let, it's usually minimal. You might buy a 3-bed semi, give it a lick of paint, and it might go up a couple of £1,000 based on the nice and fresh and clean before the tenants move in. HMO, typically there is an uplift. So we've done lots and lots of different types of HMO projects, and where you take as an example, we looked at one in the last couple of days. There was a pub conversion, licensed to become a HMO. It was £150,000 to buy. It needed £160,000 conversion costs, so it would have stood you at say 310, and it had a valuation of over £400,000. So there's a really good uplift there. And then when you're refinancing, a lot of the 25% investment that you need can be utilised from the equity in the uplift. So that's a big, big plus there from our box. In terms of risk, so we see the peer-to-peer side of it classed as medium, and that's simply because ultimately with any investment, we have to say that obviously capital is at risk being an FCA regulated company. We feel that the risks are mitigated by having the security, not just the first charge on the property, but also personal guarantees, etc. in place. With buy-to-let, the risk is seen as being lower because it's one single unit, one single house. With HMO, it's also classed as medium because, again, you're looking at multiple tenants. So potentially if there were multiple tenants and some had to leave, potentially you've got a void or a cost there. So it's again, mitigating those risks. So making sure that the property you invest in or convert to a HMO is one that you will, if it's half empty, it still covers the costs, so that you can make sure that there's a good profit margin within that. Hands-free as well. So I think peer-to-peer, is classed as very hands-free because ultimately the whole process is managed. It's literally an online investment, and that's the process as such. Buy-to-let and HMO we've classed as medium, given that you still need an element of, involvement, whether it's just a purchase or just the actual initial process. The nice thing with these strategies is you can be as involved or uninvolved as you like, but in reality, there is always going to be some element. Making your money work harder. So we put this slide in really just to show what a lot of our guys are achieving or expectations with the HMO side of the business through the partner. So, a 10 to 15% per annum return on your portfolio, so rental return, a 30% return on any equity that you invest in or leave into a deal, 50 to 150,000 pound income per year, which is a great income that you can generate, and we build a plan and show you how to do that. And then a profit margin of 15 to 20,000 pound per property based on smaller units as well. So a little bit of an overview of the potential income that you can do. And this is how we can help you achieve a passive income. So we talked earlier about our franchise side of the business having two sectors, so network and partner. The network side of the business is more of a focus about being in property, operating a property business, developing property, and having that as your full-time role. So a typical profiles, management level, looking to work for themselves, small startup capital, age 25 to 45, interested in property. And that's a typical network franchisee. We also have the partner. So typically senior management, looking to invest capital, little spare time, 35 years plus, interested in hands-free return, making their money work hard themselves. So ultimately people that realize the benefits of property, have that surplus income and are able to invest it into opportunities. Our partner package is there to support people through that process to build HMO portfolios through a step-by-step support with proven strategies and handpicked HMO opportunities. There is no company in the UK that can offer a network of over 120 franchisees finding and cherry picking opportunities off market and offering them to our partners first, along with the benefit of having a funding facility in the background to help them structure and purchase the property so they can do works, etc. with it. And that's really where some of the benefits come in place as part of our Source Partners package. So the experience, the strategies, the knowledge and the resources we've got. And how it works. So first of all, we offer training. So I'll touch on the training very shortly. We put together a portfolio plan. We identify the HMOs and our network help us do that. We have then works that we've put in place for conversion. So we project manage that for you unless you'd like to do that yourself. We set up the management of the tenants in place. And then you start to receive a hands-free passive income, which is the key point of our partners package. We will fund as a business up to 100% of all profitable property investments. Bit of a tongue twister there. So so if you find an office or one of our franchisees finds an office, or let's talk actually about the project that we saw, we talked about the other day with the partners. So it's a pub conversion. It's £150,000 with £160,000 conversion costs. Now, we expect our partners to have some equity, some capital, because on most occasions, capital will be left in. It could be a very little amount, but there are other costs as well that go around it. So we can then step in as a business and say, right, okay, we can help you fund this, and then give you the money for the works, and then allow you to refinance it, pay us back, so you've got minimal amounts of money left in that project. And we've got the figures and the stats, so we can actually sit there and show you, walk through a particular project and show you how that works and the sort of returns that you'd expect to get from that as well. Training is one of the key points. So some of our guys, as I mentioned earlier, aren't able to attend the training. So it's up to yourself how involved you want to be. But we hold 18 HMO training days per year. You can come to them multiple times. You can literally click in to our platform and register and come along to them at head office and see them. We have experts that do the training, so planning specialists, builders, and some of the key areas we focus on, particularly with HMO, is planning, structure, funding, licensing, refurbishment, conversion, development, finding and managing tenants as well. So what you've got to look out for on top of the agents. We operate them every single month, and they're repeated every 4 months, so you can come along to them again. And we do support days as well. So we're here to sit here, put in place a action plan to help you identify your goals, how we can help you achieve them, what the cash flow looks like, how many HMOs we're looking to purchase per year, and what the target number of rooms, etc., are based on those. We have a one-to-one support platform as well. So one of the really cool things about our network is that our network has that many HMO specialists in. They're actually able to mentor our partners and help and support them throughout. So you're always working with somebody who's actually doing HMOs and aware of people with HMOs and what to look for, what not to look for, what works, what doesn't work, and then help take you through that process as well. Some of our previous projects. So to give you a bit of an overview, if you get a chance to have a look at our social media, you'll see lots of projects. You'll see this one in particular. We've done a full video and walk around of Mike converting this to a 7-bedroom HMO. Mike's one of those people who likes to get his hands dirty. So, you know, he was straight in and taking part of the whole thing as well. Mike's actually moved on to another one now, which is fantastic. We've also got Sham. So a 3-bedroom that is converted to a 6-bedroom HMO and then refinanced to release equity. So really good yields on that one. So he's able to do that as well. We've got other HMOs that head office have done, funded by head office. So we're currently looking at another 5 in our project's pipeline plan over the next 3 to 4 months that will be released for funding. What does success look like for you? So for you, it's important to look at what your goals are. You know, who your partner is going to be to achieve those goals, and what the next steps are as well. If being a partner, if creating passive income and helping achieve those goals by using property is something of interest, then please reach out to us. This is our website address, sourcedfranchise.co, and Liam, our franchise manager, is more than happy to have a chat with you, provide you a bit more information about how passive income can work. Also how we're set up, how we operate, what our costs are, and how it looks being part of this network and this fantastic team. So Liam's email is liam.neck, N-E-K, @sourced.co, and it's just .co at the end. Well, thank you very much for your time, everybody. Really do appreciate it. If you've got any questions, I'm more than happy to answer those now. Alternatively, if you'd like a private call, please feel free to drop us an email or contact the office, and we're more than happy to set that up and have a chat with you as well. Thank you.